I'm going to show you guys exactly what the ICT 2022 model is. I'll show you guys where a lot of people go wrong with it and a checklist for this model. Essentially, the basics of a 2022 model is looking for a run on liquidity. So if you're bullish, you want to see price take out an old low. That old low is categorized as sell side liquidity or sell stops. It takes it out where I have labeled number 1. The second step is for price to displace higher. You want to see speed higher. It doesn't have to see displacement up, but the sharper the move up that creates the market structure shift, the more significant that is, because the displacement up is smart money's footprints. If price moves away from that sell side liquidity quickly higher, it's giving you feedback that potentially order flow has switched bullish. So we look for a run on liquidity or a run beneath an old low, which is where we have the sell stops, where 1 is. Then we look for a market structure shift. You look for an old high to get taken out. That is number 2. So that's where I have this little light bulb. That's the market structure shift. Also, within this price leg from 1 to 2, you look for a fair value gap within that price leg. So in this move up that creates the market structure shift, you're looking for a fair value gap. Similarly, in the bearish example, in number 1, you're looking for a run on liquidity or a run on buy side liquidity. After that, you're looking for a move down to take out an old low. This is considered the market structure shift if it creates a fair value gap from 1 to 2. So there's 3 steps: a run on liquidity, a market structure shift, and a fair value gap. Before you look for those, you need to know where price is going. If you don't know where price is going, this is useless. Now, a lot of people don't talk about that. In these 2022 model videos, you see they're just discussing pattern recognition. Pattern recognition means nothing if you don't know which liquidity the market is heading for, whether it be sell stops or buy stops. So we'll be talking about that in a little bit. Now, if you have a bullish bias that price is going to head for a level of buy side liquidity, then in that case, you're hunting for these type of models along the way, where you're looking for a market structure shift followed by a fair value gap. And don't worry, I'm going to show receipts of me trading this model live. There's a lot of people out there just showing you this in hindsight, but they can't really trade it. So I have receipts to prove that I could trade this stuff live. Now, this is what it looks like if you have a higher time frame bias and you're looking for a 2022 model along the way. Now, sometimes price will be at an all-time high. How do you know to look for a bearish setup all the way up here? I'll be covering that as well. So first, I'll be diving into the example of when you already have a bias that is bullish, what to look for. So you can see that price returns back down. I'm going to show you guys how to find that bias. Price takes out this old low or a level of sell side liquidity. It takes that out, then we start to see displacement away from that. So I'm going to go down to a 15-minute time frame now. And this is kind of how I gauge whether price is going to head for the buy stops above or the sell stops below. I'm looking to see what does price do below the sell side liquidity. So it takes out that low, and then we see speed away from it. So when price creates this initial market structure shift right here, we don't really know if this is going to put in a reversal of a smart money reversal if you're just relying on this pattern right here. What we can do is we can wait for price to return back lower and see what it does when it creates this retracement down. Does it expand upwards now, or does it just reach back for the low? So notice it created the market structure shift of the 2022 model, and it returns back lower, and then it expands higher. What is this doing? This is giving me feedback. What's it giving me feedback of? Well, see how it's reacting to this up close candle in here? That is a bullish breaker. So I'm looking to see what PD arrays are being respected. Where is price delivering from? We're delivering from the sell side liquidity over here. It's expanded higher. It returned to a bullish breaker. What's a bullish breaker? That's when price creates a low, high, lower low, higher high. You look for an up close candle or consecutive up close candles in that move that creates the higher high. I have a full video on that on my YouTube. You can check it out. Price returns to the breaker, expands away from it, creating a new high. This has done a few things now. It's taken out the sell stops, and it's expanded away from that. That's already showed me that smart money bought those from those sellers beneath this low. Once it returns to a bullish PD array, any PD array within the PD array matrix, a breaker is one of them, and then it expands away from that with speed, that's giving me more confidence that the narrative is bullish. So in this case, price is expanded up. It's starting to consolidate in here. Now I have a bias that price is going to have for the buy stops above. Why do I have that bias? Well, it's proving to me that order flow is bullish by respecting a bullish PD array in here and expanding away from that. It's delivering from the sell side liquidity and expanding for this high. And I know as price is consolidating here, alert this to my Discord member group, where I was saying price is likely to reach for the buy side liquidity above because everyone and their mother in here is looking at a rising wedge pattern and a bear flag. Those people are likely to get smoked. There's going to be lots of buy stops above here. So I'm looking to fade that retail idea on top of that. Once I have that bias, again, we're discussing the example where we have a bias that price is heading higher. Then we'll be discussing an example in a second where price is already at a new high. How do you know it's going to reverse? We'll cover that. In this example, we have a bias now. The price is going to run for the buy side. Why? Because smart money bought from the sellers. If they want to get out of that position, who do they need to sell to? The buyers above this high. That's buyers at a premium. Well, damn, why are there going to be people buying up there? Well, when it breaks out of that range, breakout traders are going to be long above this high. On top of that, all of those retail traders trading the bear flag and also the rising wedge, their stop loss is going to be above there. That's the invalidation point for them. So there's going to be lots of stops above here categorized as buy stops. That's where they're going to attack next. When price is consolidating in here, this is when I can start to use things like news. If you're new, do not touch news. Wait till afterwards. But when you know what it is that you're looking for, you can capitalize on the manipulation during these high impact news events. So this was at 8:30, and I'm going to play an example here in a second where at 8:30 it opened up and traded lower, and we have the bias that price is going to head up to the buy stops. So now, exactly what we just talked about in here, this 2022 model, I can hunt for this now. Why can I hunt for it? Because order flow has proved to me that it's bullish. So you don't see people talking about this. They're just telling you to hunt for this pattern. This pattern means nothing until you get feedback from the algo, whether order flow is bullish or bearish. It's gambling if you don't know where price is going. So if we go back to this example right here, we have the bias that price is going to head up to here. Well, now I'm just hunting for a 2022 model. There's a few different things that I could do in here. I like to wait till 8:30 to 4 p.m. New York time. Right? There's kill zones within that. I personally don't focus on those kill zones. It doesn't mean that you shouldn't. I'm just showing you what I do. Now, I can go on to an hourly or I can go on to a 30-minute, and here's where I'm just marking out PDRAs. You can mark out fair value gaps, order blocks, breaker blocks. See this fair value gap right in here? Don't worry, I'm going to cover this lower time frame model. I know some of you guys are thinking that right now. I'm going to cover this lower time frame model in a second. So I do have a big announcement before we continue. I'm starting a 7-day video series starting January 7th in 2024. So each day for 7 days straight, I'll release a new video covering my personal approach to the market using ICT concepts. If you're brand new to ICT concepts, I'm going to go from beginning to advanced and exactly how I view the market, exactly how I go into the market every single day and find, draw, and liquidity targets. If that's something you guys are interested in, you can check out that first link down below. There is a 3-day free trial. So if you just want to join for the first half of it, join on January 7th and you'll get the first 3 videos for free. So here's an example of some stuff that I post in my Discord server. Every single day, I'm going on to the lower time frames in these markets, looking for setups, and I share ideas where I believe price is heading. So this is on the 27th. We had a bullish 2022 model. I'll mention that. So I'll go, we had a market structure shift plus fair value gap after taking out sell side liquidity. So I'm anticipating next to see if price can run for the buy side during the PM session. So we had a market structure shift. We had the fair value gap. I'm looking for price to now target buy side liquidity. So these are some things that I will post in the Discord. You can see that price did run up to the buy side towards the end of the day, and I did trade that, and I show my executions here and there. So I'm not just calling it hindsight. I do call this to Discord members. Again, if that's something you're interested in, check out that link down below. So I'm just marking out some of these PDRAs along the way. So we're anticipating for price to trade up to here. I'm going to mark out a higher time frame PDRA. This is a 30-minute fair value gap. On the lower time frame out of here, I can go down into I'm going to leave that on the chart for a second. Let's go down into a 10-minute. Why the 10-minute, Dan? It doesn't matter. I could choose a 5-minute, 15-minute, 10-minute, 20-minute. It's whatever you prefer. This is going to be fractal across many different time frames. See this last up close candle in here? That's where price created the market structure shift. This is the swing high. Okay? Price breaks through here. This is what ICT teaches in the 2022 mentorship. You look for it to break that. And within this price leg, right, we took out the liquidity over here. So it took out the sell stops. Okay, so this is the sell side liquidity. Price took it out in this price leg from 1 to 2 up here, we're looking for a fair value gap. Just like we talked about over here, 1 to 2, we're looking for a fair value gap. So now I'm going to remove this orange shaded area. See this little imbalance in here? If you don't know what a fair value gap is, I do have a video on my YouTube. You can go to the playlist section, you'll find it. But basically, when this candle number 1 over here and this candle number 3 do not overlap, it just creates an imbalance. That's your fair value gap. When price returns to that and expands away from it, okay, I'm not anticipating for this low to get traded to until price starts to expand higher. So since I have the bias that price is going to run higher, right, there's a few different targets that I could have. I can go back to the 1 hour. And if you look at these consecutive down close candles, this is a bearish breaker block, so I could target that. Also, we do have this fair value gap high, so this is a liquidity void. I know that this is a lot right now, but just stick with me for a second. In the 2022 mentorship, ICT talks about the algo constantly looking to rebalance inefficiencies. So this is an imbalance right here. That's going to be a target because see how it left this huge fair value gap from this candle's high to this candle's high up here or low. It's only offered sell side delivery. It needs to rebalance that. So that's going to be my target. And when we do have a bias that price is going to head up to there, I'm not looking to hold for the entire range of price heading all the way up to here because I don't know if it's going to do that in one day. So since I don't know if it's going to run this high, I just want to target that breaker that we just covered or the fair value gap. Now, when price opens up at 8:30, okay, I'm not anticipating for this low to get traded to because it ran the sell stops and it expanded higher. So when price returns back down, this is a protected low to me. So I can enter in this wick, and I know what some of you guys are thinking. There's no shot you would have caught that lower wick during news, but again, I do have video proof that I did. And you could target this fair value gap high, or you could just simply do a 1 to 2 risk to reward in the direction of the bias. So if the bias was for price to head up to just this high up here, I'm not going to hold past that, but since it's going to head all the way up to here, well, I could target a 1 to 2 in that directional bias. So once you have a bias that price is going to head higher, all you need to see is this 2022 model at a key time between 8:30 to 4. Just any time between 8:30 to 4 in that direction. A run on sell side liquidity, a market structure shift with a fair value gap, and then you could either enter right here. This was at 3:55 a.m., but since we had 8:30 manipulation down and it kind of got close to that area, I could have my stop beneath here. There is some more advanced stops that you could have it higher up, but we're not discussing those in this video. So you could have it right beneath this low. It's going to be a protected low, and you can see price expands away from that. So that is the basics of trading a ICT 2022 model. Again, if you do trade like London session, this would be the long in here. So I trade New York. So this is where I got in over here. So if we're just looking at the 2022 model though, this is your entry. When price returns back down into any fair value gap within this price leg from 1 to 2, once it creates that market structure shift. Okay, since New York open was over here, it manipulated lower. I was utilizing the idea of a protected low from that 2022 model because it already ran liquidity, expanded higher. So I'm having a stop, right? Again, my stop was trailed higher, but you could just have your stop right beneath this low over here and then target the higher levels, which could be the breaker, which we covered. So I can zoom back out to that real quick. This is the breaker. I'm not going to cover that in this video either, but I do have a full video on that on my YouTube. So you could target that breaker. If you were targeting that breaker, that's a 1 to 2.5 hour trade. Where I targeted, it was actually a 1 to 7 hour from where my stop was trailed to. If you had your stop at that low, it would be 1 to 4.5. Okay, and how do I know it's not going to run this high? Well, when price returns back to this breaker and rebalances this fair value gap, I don't know what it's going to do from there. It can retrace back down. It could consolidate and then just expand higher. So I just want to get out in this area. I'm not always holding for the higher time frame bias target.
And I was on that same curve once my initial luck wore out in the 90s. Every single trade I got into was a loser. Every single one. I could not get a commodity trade to make me any money because I did not know at that time how to trade. And every loss, I put more on the next trade. And I got pissed off and more behind the next trade. And suddenly I was losing airline pilot salaries in a week. try walking around acting like it's all put together still when that's going on. It's hard. It's really hard to do. And eventually it takes its toll on you. And all those things are completely avoidable. You have to submit to your own development. If it takes you 6 years, so what? Where else are you going to be in 6 years? At least you know where you're going. At least you're moving towards that goal. I'm a break-even trader, Michael. I can't make any money. It's pissing me off. You know what I see? That's opportunity. Because if you're not losing money, you're consistently staying around the unchanged mark, you got what it takes. You have what it takes.
So here's an example of when you don't have a higher time frame bias and how to manage on the lower time frame with the 2022 model. Again, we're looking for the same structure here. A run on liquidity, a market structure shift, a fair value gap. Okay. Price takes out buy side liquidity. See this high right here? When price is at a new high like this, okay, I'm not considering this run a run on buy side liquidity, since if we look at this example real quick, okay, we already have the bias that price is going to head up to here. So all I need to see is a run on short-term liquidity and then expansion back up, and that's enough for me. When price is at a new high, I like to see 2 runs on liquidity, and those 2 runs on liquidity are a level of liquidity from the left side of the chart. So this could be the first run on liquidity. Let me make that a 1. Oops. So that's the first run on liquidity. And then I like to see a short-term high formed and then another run on that liquidity. What this is doing is it's taking out the shorts from over here. This initial move down is inducing retail long. You get another run on liquidity. Now there's 2 levels of liquidity ran. Once we get that expansion lower, then it's likely to start targeting lower levels of liquidity. So once price is in here, right, how do we know that it's going to reverse? Well, what I like to do is I like to go onto a lower time frame. We can go on like a 5-minute, or actually let's go on to a 2-minute time frame. So if you notice, we do have an even lower time frame fractal model in here. So if we're looking at a 2-minute chart, you could say that this was the market structure shift, and then this right here would be a leg of distribution. So this is going to get a little advanced for a second, but this is a market maker sell model. If anyone's a little bit more experienced, you know exactly what I'm talking about in here, where we have an original consolidation, price moves away from it, and then expands back lower. The 2022 model is the pinnacle of that market maker model. So this is going to be the smart money reversal point. This is a distribution, then it can do redistribution and take out that level. So what I like to do, if price is at a new high, I'll wait for a 2022 model on the lower time frame to appear. So we're getting that right here. Look, it's the exact same model that we just covered. So we get that model, and then price expands away from that. That, to me, when we don't have a higher time frame bias, this gives me confirmation that price is in a sell program and it's going to target the liquidity lower. So if I just see this initial 2022 model at a new high and I don't have a higher time frame bias, I'm not going to be so confident to take this short setup here because I have no bias. But once price expands away from that 2022 model, right, if we look over here, this is when price returns into the fair value gap. If price expands away from that, then I can know, all right, well, this is likely to put in the smart money reversal, and it can start to target the sell side liquidity lower. So now I know that this liquidity is going to be targeted. When price retraces back up here, I can get in for a later entry, okay? And I could get in, put my stop above this high, up here above the fair value gap, and then target the liquidity lower. So I don't know how far this one retraces. Yeah, so this was probably going to be around a 1 to 1.5 hour trade, depending on where your stop is. But really, in short, if I have a example where price is just consistently setting higher highs and higher lows, and I don't want to just short the higher high, what I can do is I can wait for a 2022 model to present itself. I could wait for price to return to the fair value gap and then expand away from it. And once I see that expansion away from it, well, I know it's going to start targeting old lows. So that's what you can do in an example like this. If we go back to the higher time frame, when price is just consistently setting new highs, right, you can wait for that confirmation. So I'm not just blindly taking the first 2022 model short. As you could see, it does fail in here. So this is a perfect example, looking for a market structure shift, okay, a fair value gap, and a run on liquidity. So in this example, it did take out this buy side, created a 2022 model. It reacted off that fair value gap, and then it's likely to expand lower now because it's already given us the feedback. So when price does a little retracing here, we could get in a short in a different fair value gap and then target the lower liquidity. So Dan, where would you have your stop if you're looking at like a higher time frame 2022 model? Well, if this is the market structure shift when price takes out this low, if we have a fair value gap right in here, really when I'm looking to trade 2022 model, I'm not so focused on entering on a specific fair value gap, but I'm more focused on what is the RR that I can get. So if I can get above a 1 to 1.5 RR, I'll take the trade. But for an example like this, let's go on to like I think a 15-minute time frame would be the best example here. So you could have your stop beneath the highest fair value gap. So see how this is the highest fair value gap right here? I'm looking for the high of that candle wick. So right here, that could be your stop because price is likely not to reach up for that. You don't want to have your stop right here because price could potentially do a retrace back up, rebalance that inefficiency, then trade lower. So you don't want to just have your stop right above this high. It's not likely to trade to this high, so you could have it above that one, or the safest stop is going to be above the swing high before the market structure shift. So on the high that takes out liquidity, that's going to be the safest stop. So this red level will always be the safest stop for a 2022 model. When price returns back up into a fair value gap in here, it's not likely to take out that red level. And if it does, well, you had the wrong bias. So those are going to be stop placements. Just inverse it for a bullish example. That's going to be it for this video. Hopefully you guys enjoyed. And again, if you are interested in joining the Discord group, it'll be the first link down below. Have a good one.